On Thursday, September 26th, I warned that the VIX Volatility Index was at a key juncture and that it might pop. And it did on Friday, chilled a bit on Monday, and then popped big time here again on Tuesday, October 1st. So now let's take a look at the broad market. This time I'm going to look at NASDAQ futures. We had been looking at the S&P 500 markets in my videos the past couple days. Let's head to the tech side and see what is playing out, taking the VIX analysis and then translating it over to futures for tech. So I'm HEMA ready. I use price action, market timing, and momentum to boost my trading and that of my tribes. You'll notice I have my favorite momentum indicator down below the RSI power zones. Now, when you're applying it on something like the VIX that moves opposite the broad market, remember that if the RSI power zones on the VIX is rising, it means that that is a situation where fear is rising in the broad market, so it's not good for stocks and the like. Let's take this and look at the daily chart and the intraday chart, and then we'll move to NASDAQ futures. So we have a couple of key areas of resistance at 2130 and nearby it looks like at 2141. That is the next place up ahead that the VIX could pop to on the daily chart. On the 60-minute chart, I warned my S&P Edge Pro students this morning before the market opened that the support here at 1650 was important. And I pointed out that the S&P 500 markets, the ES futures specifically, were likely to fall, and they did, and they fell hard. That is represented by this giant green candle on the VIX. Okay, all that fear in the markets allowing stocks to just fall and drop lower and related indices. Now you can see the VIX is consolidating. So let's get a little more granular. It has again retraced part of its last move. And lo and behold, that 50% support seems to be holding again. So this is not a good indication for the broad market, because if the VIX isn't dropping down, it means that the broad market's probably going to be staying suppressed and probably resume lower. Okay, so just based on this look at the VIX, I'm thinking we're going to have another weak day on Wednesday. But again, we have to see what unfolds overnight and into the market open. That's why for the E-mini S&P 500 futures, I publish my research every morning for my S&P Edge Pro students, showing them exactly what's happening within that hour or so of the market open. But I'm going to take a little turn to tech world here and open up the NQ futures. So here's the E-mini NASDAQ 100 futures contract chart, ticker symbol NQZ24 on TradeStation. We can do some simple analysis here on the weekly time frame, then bring us to a daily and intraday chart. We have resistance up ahead that was just scraped by last week. So 20,600, we came to 20,538. And now we are retracing some of the price action off of the September 6th week low. So 19,551 is an important support. Let's take that and move to the daily chart. Here you can see those same annotations, and the most recent price action on the daily did test an important support here at 19,860. You can see that so far, though, we have not closed below that level on the daily chart. So this leaves room for a bit of recovery on Wednesday if stocks are able to pull back higher. However, the range from the September 26th daily action is likely to cap, and you can see there's important resistance at the middle of it, 20,363. On the flip side, if we keep weakening, and notice as I go down in time frames, I'm focusing on more recent action, there'd be potential support at the midpoint of this range from September 16th, as well as the low, which is very close to the 50% retracement of that last move. And beyond that, this is the key range here, the September 6th low. All right. Now let's go to a 60-minute time frame. So I'm just going to take the exact same analysis, move to 60-minute, and then see what other details I can find to analyze the current action, to have a better game plan if I were going to be trading this market tomorrow. So as I mentioned, we tested that support at 19,860, but didn't post a close below it. There is a bit of recovery here, but this to me, especially with the RSI power zones lifting from the bear support power zone, but not posting a bullish pattern. So I teach my patterns in my 4 zones RSI coverage system, and I teach even more patterns in my advanced RSI power zone system. The lack of a clear bullish pattern right now suggests that whatever's happening here of this upside is just a rebound, and we'll probably see a resumption lower. So let me narrow in to the most recent action from the past couple days. And this is what I would be focusing on right now if I was short-term NQ futures trader for Wednesday and potentially Thursday. We had a drop. We had essentially consolidation sideways. We had another drop. And depending on where this current recovery caps out, the next downside target is 19.5. The next downside target is 19,656.5, ahead of that 19,530 cluster. I watch for recovery gains, and I think they'd be likely limited to 2215 to 2188, as you see here. So keep an eye on this action. Keep an eye on that VIX. And if you want to learn more about the RSI power zones and you're brand new here, check out the description of this video for how you can get started with understanding the basics of the RSI power zones. If you're in my tribe, keep an eye on your email this week. We have some awesome specials going on the RSI power zones suite of education. And whether you're new or been here for a while, if you could give me a like on this video, if you got value out of it, share a comment down below. Let me know what other tickers or markets you'd like to see similar analysis on. And we'll keep tabs on this market action as we kick off October and Q4. Catch you soon.